Jumbo, Ohio, ni hao ma, guten Morgen. All right, good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but chicka slim shady. Please stay small, stay humble. Focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I like trading. I like it. It's awesome. It's interesting. It's fascinating. Before I go to bed, I'm looking at charts or doing research. When I wake up in the morning, I'm looking at charts or doing research or contemplating or strategizing or thinking about next year or thinking about the next hour. It's relentless. It's 24/7. But some people feel like that about sports. Huh? That's all they think about all day long, sports. They want to talk about whatever their favorite sport is. I like money. What can I say? So I think about it 24/7. I got money on my mind. I got my mind on my money. Got my money on my mind. Cool. So anyways, thank you for being here. Thank you for all the awesome questions. Let me know how it can help. I could just look at the charts and analyze them with you, or I can do a deep dive in something specific. Lucas says, hey man, we got cold weather coming. That's right. Although I heard somebody say, oh my God, it's -14 in Fargo, North Dakota. That's nothing, dude. That's nothing. That's nothing. Huh? That's nothing. So anywho, yeah, Maida said, not Miami. Yeah, I looked at Havana weather and it was 80. And then I looked at Miami weather and I think it was 77. So anyways, I'm just inkling. I think I should do that Cuba trip. Maybe after Christmas, but before New Year's. Huh? Maybe go down to the beach and show everybody my belly button tattoo. Is the diamond ring too much? That's a little bling, huh? It might be a little gay too, but anyways, it'd be interesting. So cool. Let me know how it can help. Right? Let me know how it can help. Let me know what currency pair you want me to cover. In fact, why don't you put that in the chat now? She says 35 degrees Celsius here in India. Where in India are you? That's pretty hot for this time of year. Probably south, huh? I remember Rajasthan was really hot when I was there. Yeah. Oh, yeah. Let me know what you'd like me to cover in the chat. Rajkot. Yeah. Okay. Yeah. That sounds hot. Is it in Rajasthan? Is it near Rajasthan? Is it in the desert? Gold, oil. Hey, Mita, are you trading oil more now than before? That's interesting. Diamonds. I know a bit about diamonds, Matrix. Yeah, right on, Meta. That's cool. Richard's like, yeah, I'm in St. Louis. We got some bad weather. Oh, faux show. So anyways, guys, let's finish this part of the opening. Look at the description below the video. Click on my book, on the link to my book on Amazon.com, and leave a review. Please. The second thing, click on the link, visit fxbootcamp.com and join for $88 a year. Okay. And then click on the link to tradersway.com. I've been working with them for about 8 years. They earned my loyalty and respect during the central bank debacle in Switzerland. And it proved to me they are actually an ECN. They're actually a straight through processor of your trades. They actually did it. And you're like, well, Wayne, that makes sense, right? Yeah, well, some very, very large brokers that called themselves non-dealing desks went out of business because it seemed like they were dealing desks. So anyways, it's interesting world. And what happened that day is Traders Way, from their actual actions in the real world, showed that they are ethical and trustworthy. And other brokers perhaps were not ethical, nor perhaps were they trustworthy. So better than a banner ad, huh? Truth. So anyways, tradersway.com, I recommend them. They have C-Trader, which is interesting. I was doing some research on something the other day, and they're like, oh, it works with C-Trader. And I'm like, oh, really? So I might need a C-Trader platform to test something out. So, hey, Traders Way is perfect for that. I use MT4 here. You might use MT5. It's all good. Tradersway.com. And here we are after the major move of YCC. What do you stink? Okay, big move, obviously. But one of the things we talked about last night, 24 hours ago, somebody said, hey, should they buy the ends after the drop? But that was down in here, okay, where we are now. So that would have been, let's say, on this price, let's say 132.5, and it dropped all the way down to 130.5. So if you had tried to do that degenerate gambling, I told you could do it, but I would consider degenerate gambling. You could do it, but if you work for me, I would yell at you. You could do it and make money, but you're probably adding volatility to your portfolio, which is bad. Okay, all of that. And what happened? Boom, it dropped another 200 pips. So, yeah, so if you ignored me and lost money, doesn't bother me. I can sleep at night. Cool, but what do you think of this? Do you like this chart template, by the way? You see how I shifted way over? And then I have one moving average. And notice that I'm highlighting what are actually called, what do they call them? It might actually be pivots, but fractals. I think it's just a different way to display a fractal. I don't like the way that MT4, MT5 presents fractals, those little weird arrows, which I believe reflects turning points, which you could just call a pivotal point, but not a pivot point. But yeah, so peaks and troughs for sure, but here's how you do it. Of course, you do this visually with your mind's eye, but you're connecting these things, right? And there are future levels of support and resistance, right? If we're going to go that way, okay, if you believe we're going to head down and basically try to use that moving average, then it's more like okay? And that's that. This is an hourly chart. You can do it on a 1 minute chart. Excuse me here. Me, 20 dwarves. In sooth, I know not why I am so sad. The wane in Spain falls mainly on the plain. Yeah. All right. Better. When will I switch to TradingView? I don't know. I just, I'm just too busy. I don't feel like there's a need. But we have a few boot campers that use TradingView very, very well, and I am impressed, for sure. Okay? Matrix is like, it's all research. Yes. Yes, it's all research. I do believe in that. And you'll see, like, this time of year, where I guess I should say the macroeconomic conditions that we have right now is that we have changes at central banks. Okay? And that's doing things like changing price. Have the fundamentals changed? No. Has seasonality changed? No. So what's changed? Well, a policy has shifted price. And maybe because of the fundies, maybe because of seasonality, or maybe they're stepping in front of the changing fundamentals and they're trying to make policies. But it is human behavior, and it's a I guess you would call it more like political analysis of money, right? Like this is a change in yield curve control, but you got to understand USD yen shouldn't have been at 140 to begin with. It shouldn't have been at 150 to begin with. The only reason it was way up there was the Bank of Japan forced yen weakness. And now they're not forcing as much yen weakness, so now it goes back down there the other way. But it doesn't change macroeconomic conditions. Just changes price at some point. So if seasonality says, let's just say up for this pair right now. It's actually neutral, but let's say it's up. But it's down. Is seasonality wrong if you were using my fundamentally based super secret alert service? And it says, oh, seasonality is up, yet price is down. Is it wrong? No. It's a fact. Use the facts in your analysis. What about the fundamentals? Well, that favors USD for sure. We're on our way to, let's say, 5%. Japan is letting the 10-year T-note run all the way to 0.5, and their interest rate is still basically zero. So are the fundamentals wrong? No. Richard says, but the yield curve control was considered tightening. Yes and no. Remember, it's yield and not interest rates. And is it considered tightening or a reduction in a loose policy? See, they're not actually doing anything, Richard, except buying 10-year T-notes at a different price. Okay? Well, they still shouldn't be buying 10-year T-notes. The biggest question is, if they were not buying 10-year T-notes, would the 10-year JGB be at 2%? Okay? Okay? So, Richard, they're just buying them at a new price. Why is that? Okay, so let's discuss this with Richard. Okay, let's say we have a bond that costs 100 yen. And for that, it pays you 1%. Okay? If the Bank of Japan comes in and says we're going to buy at 80 now, what happens to yield? Okay? So if they were going to buy, right, they just changed the price. And let's say it was going to be 1 billion yen. They're just going to buy 1 billion yen at 80 instead of 100. So the only thing that changed was price, but what does that do? Allows it to fall. Yeah, I discussed this at a fair length yesterday in the day trading group on things to watch for over time and the things that will matter to this market. At what point does a rising yield in the 10-year JGB, Japanese government bond, at what point will it matter? Does it matter now? Maybe. But if they go to 1%, if they go to 2% at some point, it will matter for very specific reasons, and it will probably have an impact on the US dollar, and that could have an impact on USD Mexican peso shorting. Okay. So, Richard, what I want you to be focused at is if we drop from 100 down to 80, that's what I want you to be focused at. Okay? I don't want you to think that it drops and then they buy at 80 and that pushes it back up. No. Because what they're doing, if you read the press releases, Richard, and that's the key, do you have the guts to actually read the press release? It's one page. But what they tell you is they will buy at this price, but only this price. So prices don't go up. And if it falls to 78, they buy. If it goes to 79, they buy. If it goes to 80, they buy. If it goes to 81, they don't buy. Okay? And really what they're doing is allowing the market to fall enough to allow the yield to go to 50, and then they make their decisions based on that. Okay. So it's actually kind of more yield than it is price, but obviously there is a relationship. Cool. So if you were that guy yesterday, I don't remember who it was, but somebody's like, should I buy it here? And I gave a 20-minute diatribe on how I would consider that degenerate gambling. And if you did that for me, I would fire you. Yeah, right as rain, Bubba, right as rain. Very good. Yeah, you know what? Honestly, though, Richard, go to the Bank of Japan website, find the press release, which is a bit of a journey in of itself, but you want to become an expert. So you want to get good at finding these pieces of information on all the different websites. But just for bragging rights, you can tell a buddy, you're like, man, I was on the Bank of Japan website and I downloaded a press release and I used it in my currency trading analysis. Dude, just do it, man. Okay? Because all that information's there. I mean, that's part of what I'm saying to everybody here. All this information is publicly available and released. People actually want you to know this. So if you don't know, you're doing something wrong, right? Wrong, right? You're doing something wrong if it's freely available information and you're ignoring it. Then that's nobody's fault but yours. That's a brutally honest piece of advice, but I don't have a lot of time with you every day, so I might as well be brutally honest. Okay? So another one we talked about yesterday in the day trading group was this one, and I do have a technical trade plan for it. I almost took a trade last night. I mean, I hummed and hoed and hoed and hummed, but that's kind of what I'm thinking now, but I'll probably catch it later. But are you going to play this as a double top? And the next thing is will the change in YCC at the BOJ have a negative impact on the USD? Okay. IDK. So that's part of that analysis. Anybody trading Polish zloty? Did you see that move yesterday? OMG. Oh my God. Oh, I guess I'm already here. I'm on Lira. Let me add another one. I'll never find it if I do it this way, right? No, maybe I will. What am I doing again? Polish zloty. Euro Polish zloty? Yeah, let's do Euro Polish zloty. And let's put this on monthly, I guess. And that's a nice move, eh? Look at that breakout. Pays a huge swap, by the way. If you're short Euro PLN, okay? See, it moves sideways forever, which is actually perfect for a carry trade. But now there's been a move. I got to move. Give me the juice. Okay. Interesting, huh? So maybe that's Oscar Mike on the move. Okay. It's moving. You know, Rand, you see Rand. Now this is daily. The way I'm reading Rand here, South African Rand, is probably like that. That would be interesting. And again, that's US dollar weakness. I'm kind of looking for something similar in Mexico. The problem is that's not like, I mean, that's technical. So that is what it is. And maybe that has to do with YCC change at the BOJ. It could. And again, I discussed it at length in the day trading group last night, so maybe join the day trading group. But the next thing is, it's still in the face of seasonality, so I don't ignore it. I just have to look at it and say, well, there's additional risk involved. Okay? So what would that do for gold is the next question. Yeah, that would push gold up. Yeah. I think the big move for gold will happen later in life. I think the probability of a global recession in the first half is quite high. And if that does happen, that is disinflationary, which would bring gold down. But yeah, maybe later, maybe down the road, maybe, again, I'd have to look at some seasonality for gold. But I think my guess going off the top of my head, you know, sort of April, May, June might be a better time to buy gold. And then later, third week, you know, between the third week of August and the third week of September, maybe I buy gold. So another leg down would be interesting for gold. But right now it is up. And we've been talking about this at length for days. And I do foresee something like this. But it's bullish. How do I handle that? Okay. See, my fundamentally based alert service, super secret, it doesn't make mistakes. It's quantitative. It's math. It is what it is, and that's a fact. So how do you handle a situation where, let's say, I'm a bear on this, but this is rising? How do I handle that? What if I thought this was very bearish? Well, I can buy it with bells on, meaning I'm very, very cautiously buying because this is technically bullish. And that too is a fact. So if I was a bear, the safest thing to do is say, well, I can't sell this till I get a 21.55 cross down. Cool. Nice play. Not being in the market is a strategy. Do you understand that? Oh, but Wayne, it's going up. I want to buy it. I want to buy it. Well, then you're falling back to technicals. And that's that. Now, you can trade it technically, but just remind yourself, this is technically going up, but maybe fundamentally, if the fundamental trend continues, this will be down 3 months from now. So what do you want to do? Well, you could be buying it technically, but you're right. And what I recommend is when the technicals are up but the fundamentals are down, you're short term long. But if the fundamentals, if the technicals then turn, let's say here, now the technicals are bearish and the fundamentals are bearish. Now you're long-term short. Long-term, sorry. Hang on, I can't even write and talk at the same time. Long-term short. You understand? Which means, let's say on gold, let's say on the way up, when fundamentals are down, you're trying to make like $25 a trade, right? You buy it at $17.25, maybe you get out at $17.50, and that's pretty good. That's a good day, okay? But on the way down, you're looking for 300. So you sell it at 18, you're going for 15, or maybe 200. Okay, you sell it at 18, you're going for 16. What's different in the technical analysis? Nothing. The only thing is you're letting your winners run when your technical analysis aligns with your fundamental analysis. Doesn't that sound unbelievably brilliant? Okay. If that won't make beautiful people laugh at your jokes, nothing will. And that's what this is all about. Oh, you're so funny and rich. Okay. Cool. So that's how it works. Okay. So going back to this, what I've been saying for quite some time now, I do want to sell it probably in January. So I'm waiting, and I say probably in January because it could be in the middle to the end of December. Think of it as a window in time. I don't know exactly when, but I got to be there when it happens. Okay? It's like waiting for a flower to bloom. So it could have been last week where it did this. Game on. Okay? Permission to engage. Okay? And so what happened? Came down, hit the 21, and popped. Okay? Oh, so should I sell? No. Check this out. Maybe this ends up being a triple top. Okay? I think this could go to 1850 before it falls. So I'm waiting. So what's today going to be? A breakout and above? Yeah, that's cool. Am I going to buy it? No. If I was going to buy it, I would have bought it off the 21. You see? Easy. Easy. And when we were near that 21, I already drew this for everybody to say, well, there you go. 1770. Okay? I want to sell, but that's bullish, so I can't sell. Well, now, after the bullish move, now we're at resistance. I can't buy that. What am I, dumb? What am I, stupid? Huh? Mama didn't raise no fool. I don't buy at resistance. I buy at support. So, now I can't buy it. I could sell it, but I consider this bullish, so I wouldn't sell it either. Now, I could sell it with this for being a target, but that's not my target. My target's down here. So I kind of need this channel to break to the downside and then set up a little lower high action and take this down. Now, I risk being very, very, very wrong. Maybe yield curve controlled, right, policy at the Bank of Japan weakens the dollar, and maybe we're doing this. Maybe we're on our way to 2,222. Could be a rabbit, could be. Okay? But does it change the fact that over the last 20 years, typically this happens? Should I throw that out? Should I ignore it? No, that goes in the analysis. Should I know that gold could take a nosedive in January? What would make that happen? Oh, maybe the S&P 500 falls. Is that possible? I don't know. Put that in your analysis. If the S&P 500 falls, what happens to the US dollar? Does the Fed raise 50 in February? And another 50 at the end of March? And by the time we're at the end of the first quarter, is the market talking about 5.5% as a terminal rate? Are we talking about 6 as a terminal rate? What's the lexicon? What's the zeitgeist of the future? And what would that do to the US dollar? Well, I think if this is down, this is going to be up. And now if this discussion is we're going to be somewhere between 5 and 6, and not 4 to 5, but 5 to 6, okay, that pushes this up. All of that would push what? Inflation down. We'll put I down. Okay, but nonetheless, disinflationary, so that pushes gold down, pushes dollar up, and yeah, could we be on our way to 1,400? Yeah. And yes, that would make beautiful people laugh at all my jokes. He's so cute though. Okay. Richard says, what would make you sell? A 1, 2, 3 retracement? Okay. Any sign of a reversal is good for me. So 1, 2, 3? Yeah, well, here's what starts things. Let's pick like a high here. Like we'll use this chart here, okay? So it usually starts with some consolidation. Why? Some bulls are taking profit and bears are not selling. So there's less and less and less bulls, but there are no bears. Then you want to spot capitulation, where all of a sudden you go lower low. So do I care about the 1, 2, 3 or head and shoulders or double top, triple top, quad top? It's all the same to me. Honestly, it's all the same. Only the names will change every day, right? So what am I going to do now? See, if I'm already a bear, I'm waiting and waiting and waiting. This whole time during consolidation, I've been waiting. So what's going to happen next, Richard? I will engage at a lower high, or we'll call this a double top. We'll just call this one top and then a second top kind of thing. But I'll engage here, not here. Okay? But that's almost certainly not likely to happen. What is going to happen is this. And the thing is, look, we even actually talked about this in October. Okay? October? When did I say the stock market was going to rally? You tell me. I told you in January last year when the stock market was going to rally in 2023. Sorry, 2022. When did I tell you? Couple of weeks before the election and certainly after the election. Is that correct? A couple of weeks before probably a couple of weeks before the election, but certainly after the U.S. election, which was early November. Is that true or is it not true? It's a binary question. It's either the truth, it's either fact or it's fiction. Is it fact or is it fiction? How do you remember it? If you don't remember it, or if you remember it differently, then that's your truth. I don't know what you know. I know what I said because I know what I think. And one of the reasons I think it is I've sat here for 20 years. I've figured a few things out. I've learned a few things. Okay? I'm not brilliant, but I'm smart enough to realize if I do some things certain times of the year, I get my teeth kicked in. So I'm smart enough to stop doing those things. 20 years later, I tend to only do the things I was rewarded for, and I avoid the things when I get kicked in the teeth. I don't know if that makes me smart. It makes me a sissy. I'm not tough. I'm not brave. If it hurts, I avoid it. If I get rewarded with riches, I tend to want to do that again. Okay? So, check this out. If the stock market, if S&P 500 goes up, and we thought somewhere in this period it would go up, then does gold go up? Oh, I don't know anything about gold. But yeah, I could talk about it. Yeah. But really, then USD goes down. Ha! Okay. Okay. Or XAU goes up because, okay, why? Let me tell you by asking a question. If the S&P 500 is going up, is that inflationary or deflationary? Yeah, Richard, that can happen. There's more than one thing going on. There's gold and then there's dollar. Is it inflationary or deflationary? It's inflationary. Inflationary. Think of what it means. S&P 500 is an index of, almost 500 stocks in the United States. If you buy them, you own them. If you own them, they're an asset. They're an investment. They're part of GDP. They're not consumption. Okay? They're investment. You own assets. Therefore, if the S&P 500 if the S&P 500 is going up, asset prices are rising. It's inflationary. And you buy gold. You sell the dollar. Now, Richard says, well, but, on that, at some particular time, dollar was strong and gold was strong. Yeah, that can happen. Because it's relative. Now, usually there's a correlation going on, but correlations can and do and will change. But I want you to think about it as two markets. And by the way, you do this in economics. You have to do this. Okay? You would have demand. Okay, let me label my chart. Okay? For XAU, the asset priced in anything you want to price it in, In this case, not priced at all, just quantity. Okay? And then you're going to have US dollar. And then you want to look at the supply of both. And then the change. And so demand can shift up, okay, for gold, okay, and it could shift up for dollar. Or what? In this case, you could have a shortage of dollars, and therefore the price goes up. So this is price, this is quantity. This is price, this is quantity. Okay? So you could have demand go up and push prices up for gold. And what I've been saying over the last year, all this dollar strength, I can't find any buyers of dollar. So what I think is there's a shortage of dollars. So because of the shortage of dollars, supply is less than demand, pushing up the value of the dollar. Even though no one's buying it, you can't buy it. There's a shortage. So if you do get the opportunity to buy it, you buy it at a higher price. And yet other people are like, I want gold, for example. And so the demand pushes up price. So is it possible that gold is going up and dollar is going up? Yeah, on an hourly basis and on a daily basis, yes. But on a longer term basis, like let's say over the course of a week or 2 or 3, no, that's not likely to happen. You're not usually buying dollars to buy gold. You're buying gold because your dollars are falling in value. That's called inflation. But if dollar's rising, right, you're probably going to do something else with that asset than buy gold, because gold it's not even that great of an investment. They say, well, what if there's, the end of the world? Have you watched Walking Dead? They film it right here. I actually drove past the set of the final episode of The Walking Dead. I mean, literally, literally in my town. Okay? They never argue and fight over gold. What do they want? Food? More people? Bullets? Guns? Okay? You always have to go out to scavenge for food, and whoever has the most guns typically win. And your guns are worthless without bullets. Okay? So anyway, nobody talks about like, oh, gee whiz, if we only had more gold. Okay? So think of this, okay? Inflationary, if you want to hedge your inflation, you can buy gold. But what does that mean? Inflationary means the dollar is losing value. So you don't like to own an asset that is falling in value. But gold is gold is gold is gold is gold. Gold, an ounce of gold, 100 years from now will still be an ounce of gold. The only thing that changes is how much you can trade it for. You understand? How much bread will the gold buy? How many bullets will gold buy? How many, just whatever you can trade it for changes. So you're like, well, I'd rather own gold than a dollar that you think is going to lose value. Someone else might say, well, you know what? I don't want to own gold. If I own physical gold, it's very expensive to store. And if you buy the S&P 500, it's also an asset, and it'll probably go up. It's just a financial asset. It's not real. It's intangible. But that value of that asset might go up. And if you buy a particular stock, it might pay you dividends. Okay? Again, I own 2 stocks that pay me 10% a year plus the asset appreciation. So I could say, well, I can own gold, or I can, let's say, own a gold miner. Okay? That digs up the gold and pays me 10%. So if gold is going up, the corporation might be making more money. Or because there's more demand for gold, future earnings, futures profit, profit margins, all these things look good. So then the multiple goes up. So the asset goes up. Plus, they're paying me 10%. So I might make 40% or 30% next year. Okay? So one of my mining companies, I think I'm up this year about 20%. Plus, I'm going to get 10%. I've already collected probably about 5% of the dividends. So plus 10%. This year in a down year. The NASDAQ is down 35%. And I own companies that are going to be plus 30 this year. Plus 30. Okay? And so maybe I don't want to own gold. I want to own a gold miner who will benefit from gold prices going up. And I will benefit from their dividend yield. Okay? So now it comes back down to the analysis. If the reason you want to own gold is the stock market is going to go up, then the $1 million question is, will the stock market go up in, let's say, the first half? Okay? So one of the things I'd like to do, one of my big, hairy, audacious goals in the next 12 months is that we meet twice a year. Okay, we meet twice a year and we do 6-month outlooks, amongst other things. And I mean, physically, we meet somewhere, we go somewhere beautiful, we have a good time, we do some networking, we do some training, and then I'll give you the next 6 months outlook. What do you think of that? Wouldn't that be great? Twice a year, we have an opportunity to get together as a band of brothers and sisters. Brothers and sisters, pump up the volume. Chicka, chicka, chicka. Right? Cigna pays a dividend, is up 50% this year. Yeah, Merry Christmas. Oh, faux show. Okay. It's going to be awesome, guys. It's going to be awesome. So you need to answer that one question. What's the stock market going to do in the next 6 months? Yeah, well, that's our job. Let's say I have $1 million to invest. Do you think I'll ask that question? Huh? What do you think the odds are? You're asking me to invest into your Forex fund. What are the odds I'm going to ask you what you think is going to happen in the next 6 months in the markets? I'm like, what do you think of the S&P? And you're like, I'm only a currency trader. That's the end of our conversation. Do you understand that? You just told me you don't understand money. Oh, I don't do stocks. I'm just a currency trader. It's the end of the deal. You just lost it. You're dead. Well, you're not dead. You're just not going to get my money. So what do you guys think? You want to do a poll so you don't have to publicly post your thought process? Okay. What will the, I'll be specific, S&P 500 do it in the first half of 2023? Rise, fall, and I'll even put one more in there. Flat. Okay, here we go. You can answer this. I will not know what you put. This is completely anonymous. The only thing we'll know is the aggregate. Okay? I need at least 30 people to vote. And this should show you probability. Think of this as the aggregate. Okay? You would expect somewhat of a normal distribution. Okay? And what we're probably looking at is the skew. If that's a normal distribution, what if it looked like this versus this? Okay? What's the difference? Okay, stock market's going to go up. Stock market's going to go down. Okay? And it's sort of like probably slightly up or very down, depending on what this mean number is. Okay? And so what we're looking at is what's called fat tails or thin tails. Okay? Please vote, guys. Please vote. Okay? What I expect is probably a thin tail on this side. Okay? A fat tail on this side. But not necessarily. It depends how many people go flat. Okay? All right, so I'm going to end it here. And guess what we got? Okay? 83% say fall. So the middle here is it, right? I'm going to put it this way. Okay? That it's right? It's a fall. So we're going to say 83% say down. And look at the tail, 6 and 9. So that kind of gets us a bit here, right? Now, I could have asked like fall really far or fall slightly, rise slightly or rise very far. But it seems like the market thinks the stock market's going to go down, and then you can kind of you can skew this over a little bit to the left. Okay, because flat and rise are more positive, but I guess it's actually a flawed. I needed to ask one more question, but that means then I have to ask a bunch of other questions and whatever. So the bottom line is the market thinks down. Now, it's okay for you to think something else, but you need to understand what the aggregate is thinking and likely to do. Think of it as probability. And therefore, sometime in the near future, it is probable that gold comes down. Even if it never does, you should incorporate it into your analysis. I don't believe your job is to outsmart the market. I believe your job is to understand the market, and there is a big difference. So, if you were going to trade this, you would use this technically, and you would say okay, that's an obvious higher high. I've covered this a million times, but we can do it again. The way, if you took the training course at FX Bootcamp, this is so easy, boring. Okay. Okay. And then you get another higher high, right? All right. And you do this. That's your higher low. And now what? If we make a higher high, you do this, and I'll do it in another color. And what technically should happen in that scenario is this. That's what that chart says. And that chart is correct. But what if you were a bear? Well, you can still buy it, but just realize why you might be a bear. Well, you might say, well, you expect the stock market to fall. Okay, well, put that in your analysis. You expect the US dollar to get strong because of seasonality. Great, put that into your analysis. Okay? Or the US dollar relative to other currencies should be bullish based on things like growth, inflation, interest rate differentials. Oh, cool. Put that into your analysis. But it doesn't change the fact that this is up. It just tells you that if you're buying, and you can be buying, look how beautiful this chart is, that there are risks associated with it. So don't hang on for the long term. Maybe you're a day trader, maybe you're a swing trader, but you're not a position trader. You're not buying it and building it into your portfolio yet. And you might be able to tell your clients, your potential clients, that you're like, maybe in the second half, somewhere around September, you will start building portfolios of gold, but not until then. So now you're actually thinking about September, October of next year, and you're formulating a plan and a strategy for all of next year already. Well, now you smell like a professional. You smell like that newly minted 100-pound note. With King Charles on it, huh? You're like, that smells good. Nothing like a pound cake for Christmas. But until then, there's a reasonable probability, more than reasonable probability, that this market, at least on the short run, reverses. And if it does technically, so let's say up to this pivot point at 18, let's say 18 and a half. And if it turns bearish, now what? You could be short for 3 to 6 months. And I think that's what you're trying to do. You're trying to get there, right? You're trying to get there. But you got to know when to hold them, know when to fold them, know when to walk away, know when to run. Huh? Am I right? This one's for YouTube, by the way. Thank you to YouTube. YouTube, would you please promote this channel? I'm trying, YouTube. I'm trying to give really hardcore, important information to traders trying to build a business model around the foreign exchange market. Dear YouTube, I am not promoting trade, go, go, go. I'm not promoting how to get rich quick. I'm not promoting girls in bikinis, fast exotic cars, private jets and yachts. I'm promoting sit down, work your ass off, blood, sweat, and tears for years. Dear YouTube, I want people to know what work to do. And I want them to know the level of work that's required, and it's a lot. Oh, YouTube, give me the strength to get up every morning without fail, even if it means for decades, so that I can help those that are seeking help. Oh, YouTube. Oh, YouTube, Help me help those that want help, want to be helped. No, it's not every day, Mark. Oh, well, it might be every day. I'm trying to get at least one ad in there every day, Mark, because I'm trying for YouTube to like our community and promote it. And I thought if they make money from it by me running an ad once or twice, maybe that'll help them promote it. Okay, I don't know. They'll say, huh, cool. My other thought was to create, keep this free webinar every day. But I thought maybe it'd be interesting to do one paid live stream every day. Maybe earlier in the day, because this channel can offer memberships. So let's say I do a membership for $1 a day. So YouTube makes money. And maybe because they're making money on the premium live stream, that maybe they promote the channel. So they're making money on the membership, they're making money on some ads, and maybe they promote the community. I don't know, man. I don't know. Okay. I was thinking maybe one change that we could have in 2023 is some of my FX Bootcamp members, let's say in the day trading group, maybe they can come on and co-host with me for a day. Right? Where someone logs in and I ask them questions, they ask me questions. We look at my charts, we look at their charts, and there's sort of an open conversation for part of the meeting. Even if it's a half an hour, it'd be like an open conversation. Maybe sort of a podcast interview / stop, look, and correct session. I think that might be fun. But anyways, I'm just trying. All right, babe, that was real. Got nothing but love for you. I got to jump. Have a wonderful day. I'll see you soon. For those in the day trading group, I just might be late today, or I might not be able to do today's event, or maybe I do it at 7, but I got to go to Atlanta. It's an important family thing and all that kind of stuff. And I might have to at least defer till 7. I'm not trying to get out of my responsibilities. Getting there and coming back just might not happen, but I might be able to, if I can't do it at 4, maybe I could zip over and do it at 7. So just, yeah. Oh, Denise says just skip it. Yeah, this is the quiet time of the season, right? Maybe that is easier. I don't want to take up your time to go through the charts and, I'm like, see, look, nothing. Yeah. So Darko says, if you could do some research first. Yeah. No, I think what I do, Darko, is maybe just have a sign up form. So for those that you don't want to do it, they can just sign up. And I'm like, okay, today's co-host with me is Darko. Okay. That kind of stuff. Yeah. All right. Well, anyways, thank you for being here today. Thank you for being in the community. Thank you for participating in the poll. Half of you did. The other half, I don't know why you wouldn't click. Right? Right? So anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. I'll see you tomorrow.